Hi everyone, welcome back to my channel. We're going to get started with a market review of the last day of May in the S&P 500. So May 31st. I do have the S&P 500 and NASDAQ on this side. And there was an SMT divergence I wanted to point out here on the weekly because yeah, I start off on the monthly, but during the week we're looking for the weekly expansion. So I like to start off. The weekly is one of my main go-tos. You see this low of this candle right here. On the NASDAQ, price didn't make it that low. Okay, so that's just one divergence right there. I'd also like to point out that, yeah, we have this fair value gap here. We also have this one, this really small one here. So, in my opinion, we're still bullish going forward. But there is one thing I'm keeping an eye on, and that's this rejection block right here on the weekly chart. Now I'm going to go down to the daily. Okay, now that we're down on the daily, you see that? And we can tell that ES was moving lower as NASDAQ wanted to push higher anyway. So this was the stronger index. And now I would like to go down to the 4-hour. Okay, now we can get into the fun stuff. All right, so I know that I'm reviewing this area over here, but we have to take a look at the whole framework and not just the day. We had a huge spike that day, but down here, if you look closely, I'm going to pull this up for you. You see this? You see how this candle just a little bit went below that low and then we took off. So we have a place where price has taken both sides, correct? This is on the 4-hour chart. Well, this wick right here was in a 50% area of this entire range. So I take my fib and I put it on the lowest body, which is here, not down there, because this price went below that one, and this is the leg that started the whole run up. And I take it to the highest body right there. There we are, 50%. Well, what else is in that 50%? Well, you have this order block down here. But I highlighted this fair value gap, even though it's not completely below the 50% line. This was just an interest to me because, let me show you this. Let me zoom in here. You see these fair value gaps? You have one here, one here, one here, right? But none of these fair value gaps have a body in them. I don't know if anybody has watched my previous video, but I mentioned that price likes to refer back to these places where there was a fair value gap. Yes, price went in it, but it didn't put a body of a candle in there. You see all of this, they just kind of wick through. And this is the only time that price has put a body of a candle in any of this area. So, although we did, wick through in here, I was looking for a price to come back here. Okay, so I've taken off the fib because we just needed that for the 50% area. This is an OTE here. Let's show you that. Put the fib on the highest body to the lowest body as it starts to come up. And you can see, like, whenever you have an OTE, you can safely take it to the first standard deviation if you did it right. That's important. It's pretty difficult to get it wrong, in my opinion. So let's take this off. I'm going to highlight this fair value gap. And I picked this one because if I knew that if price was to go in here, it would at least want to come for this, right? People would have their stops there. And there's an inefficiency right there. So I wouldn't have picked this fair value gap. It just wouldn't have made any sense. Price spiked through it, but over here, price would want to put a body in this inefficient area, but they would also want the stops that are below that. And then what's below that? Another inefficiency. So that's what I had marked. And over on the 4 hour, not over on the 4 hour, over on this side, do you see this swing? Do you see this fair value gap? The same idea that I was speaking about over there, when price doesn't put a body through these areas, it will like to reference back to it. So what I'm going to do is just kind of show you what I mean by that. Okay. So I knew that these are it's always possible reference areas. Does it happen all the time? No. But when we're trading, this is about probability and not exactness. So if you're foregoing probability for exactness, you're probably losing a lot in trading. Because it isn't supposed to be exact to the penny. It's nice when it does do that. But does that happen every day, every session? Absolutely not. So you really just want something that's over like 80% probability. Isn't that good? I think so. So it's probable that price will come back up to these areas because there's no body in the fair value area. Okay, I've dropped down to the 1 hour. All right, so if price was coming down, okay, let's see. Let's take a look at the initial breaker, what everybody thought was the breaker, which was low, high, lower low, up. A lot of people thought that this candle, including myself, for only a second though, I just thought it was too obvious. It was just too clean. Thought this was the breaker. And so they wanted to go long here. But remember the ICT taught us that the stops are below where people would put their stops. If most people saw this as a place that price was going to go higher, the stops would be right under here, right? So even if you got in blindly under here, you would have went down a lot of money, but it's profitable. So any place where there is an OTE and it didn't work out, I guarantee price is going to go slamming down below that, and it's going to turn around and you're going to have one of these huge things. And there's something else I'd like to point out. Do you see this whole setup. You got, this is a breaker, right? So high, low, higher, high, and then come down. It's an OTE setup because it pulls back in and then we get another drop. Okay, let me highlight this. This is a low, correct? Now, logically speaking, you want to see bearish breakers form at the highs. What is a bearish breaker doing forming at the lows? Right? So maybe somebody saw this and they're like, oh, price is going up. This is a bearish breaker. No. I mean, it is. But it's not in the quote unquote right place. It's forming underneath a low. Now, I don't even know if I should be saying this, but a lot of times I'll know maybe within an hour when price is going to turn around because it's stuff like this. If you see a bearish breaker forming when price has already been traveling lower, I don't mean just a few candles, it's traveling up. Like, don't trick yourself in that way. Look at the grand scheme of what's going on, right? It's been traveling lower and then it forms underneath a low. And then right after that, you see a pop out of nowhere, right? Price is about to turn around. And it's like this combo that happens. It's like 1, this forms, 2, 3, and the next drop, you have these huge moves like this. I do want to point out that we also had something that I mentioned on the 4-hour last week about when price has been traveling down pretty hard. There's this bullish candle. The body of that candle with no wick goes below the body of the previous bearish candle, and it's kind of like a stop sign. Like, okay, we're done going lower. And it happens a lot when price is traveling down really hard. And maybe if you can't see it right here, I'll zoom in for you. Okay, I've zoomed in. Do you see that? You have this long wick, and then the body of this candle with no wick. Look at that. I don't know what to call it, but it's like a stop sign. And that will be the complete bottom. When that happens, I mean, price is not going back down there. I've seen this on the 4-hour. I've seen this on the 1-hour. It happens a lot, but it's within a context. And mainly when price has been dropping really, really hard. A little drink of water. So when price was coming back up, places of interest should have been the high of the New York session, the NYC kill zone, which is 7 a.m. to 10 a.m. So that would be the top of here. But then look right to the left, consolidation. And in my last video, while I was taking this trade, you saw me right in there saying, hey, I should hold this until close. And then I got paper hands. I had paper hands, and I got out right before a 40-point move up. But this is what I had in mind. I had in mind that it was going to go here, here, and into these red areas because price didn't put a body of a candle through that. So that's what I was looking at. Let's drop down to the 15-minute time frame. In this area, price, I'm sure a lot of people wanted this retracement, but I will tell you this. If you saw this obvious OTE with a breaker, and let's say that doesn't work and price powers through it like it did here, they will not, I've seen it so many times, they will not give you a retracement into one of these fair value gaps. It just keeps pushing higher. It's almost like you just had to know. You just had to know down here. So on this 15-minute fair value gap, I had this 4-hour fair value gap from before. I could have put a line on the opening on this 15-minute. This is what you want to see in an area that you already expected to be bullish. You want to see this form, this bearish, this order block form, right? And then how do you know that price is going to keep pushing up? You just make sure that the down closed candles are still holding price up. The opening of those down closed candles. So we have one here, right? We have another here. See? The bodies of the candles are still staying above. The bodies over here are staying above the opening price of this 15-minute candle. Okay. Same thing here. Same thing here. So as long as you see that, price is pushing up, price is pushing up. And, I know I made a mistake by getting out too early on Friday. But I knew to stay in this because of look at this open fair value gap. You're making order block. You're having price hold itself up over this fair value gap. The only other swing high other than this little one right here is this one. All the way up here. So when we have, these open fair value gaps, they're telling us, hey, I'm trying to go to the end of a range. Fair value gaps are not the end of a range. The swings are ends of the ranges. So you have there. But I had paper hands, so it happens to the best of us. Let's see. The next thing I wanted to show you was on the 5-minute and on the 5-minute chart. Okay, now that we're on the 5-minute chart, let's say you didn't see an OTE down here initially. You didn't see it. It is there. There's an OTE that happened inside of here. And I want you to choose which candle it was. I'm going to tell you, it's right here. It's this candle, the 1235 candle. Why? Well, because bam, bam. Didn't this candle take both sides of the previous candle? Whenever you see that happen on a lower time frame, something happened there. Okay? So before I go to a lower time frame, I do want to show you that if you were looking for a fair value gap to get in on this run, you would have been super late like most of us, but there it was right there. And you see how the bodies are staying inside of that? And I know the wicks can scare you, but if the wicks are scaring you, turn the wicks off. Turn that off. Oh my gosh. You see? Nice and pretty. I'm going to put the Mac on. And let's see. And then here we go. We just keep pushing up. And when you have something like that where on a 15-minute time frame you see that price is being held by the opening price of a bearish candle, you might as well just walk away from your computer and see how high this thing can push, instead of worrying about it turning around on you. I ended up getting out of my position right here on this candle, you guys. Right here on this candle. Look what happened. Oh. Oh my goodness. Okay, but let's go down to this 5-minute candle down here. I took both sides. So you could see where you could have gotten in this area. Okay, now we're down to the 1 minute. I want to point this out over here. When you're on a super low time frame, like 1 minute, what you want to see inside of a fair value gap that you are expecting it to work, you want to see signs that it's working. Well, there's about 2 right here before we get to this 5-minute candle that took both sides. Let's look right in here. Another fair value gap formed in an area where we expected bullishness. there. And then what else formed? What else is in here? An inversion, fair value gap. So that's like 3 things. This is a very bullish area right there. Okay. So let's get out of that. Let's say you missed that. Because this also happened within lunch, right? So if you were not paying attention, or maybe you took your lunch break like most of us, you would have missed all of this. But this is the candle that took both sides. There's a low here. The low is not here. The low is right here. I'm going to put a different color on it. So when I say that price took both sides, it's this low that it took. These are equal. It took this low, came up, and took the high. So I'm going to take this off so maybe you could see it better. I actually didn't record this because I'm not supposed to be trading during lunch. But I did take a small trade in here. Okay, here we go. Do you see how this is a low? You see it, right? It's not just 2 candles with 2 lower wicks. It's price went up, pulled back, pulled up again, and dropped. So that makes that a low. And then it goes above it. So now what do we have? An OTE. Up, down. Let's put our fib on. See what happens. Bang. Under 50%. What else is under that 50%? Can you see it? A fair value gap right there. Some of this stuff is so small that you really have to be paying attention closely, because they're not going to give you big hints that this is turning around, because they don't want that. And so if this is a low, if I said that this was a low here also, that price went below it, went above it, and came back on it, what does that make this green candle right here? A breaker. So you have like so many things. That's like, how many things is that? That's like OTE 1, fair value gap 2, breaker 3, and this wick dipped back into that 4 hour. So that's like 4 things. Let me take this off. I don't want to take this off. I want to see how high this this projection went, because this is my first time doing this as well. Whoa. Well, would you look at that? Wow. You know what's interesting? Look at this candle right there. The 350 candle. It hit it on the head. That's crazy. So I'm going to take this off. And, I do want to say that although I'm not showing NASDAQ right now, there is an S&T in this whole thing right here. I think it's right in here. I can actually show that. Okay.